Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. Stocks across the Asia-Pacific edging higher with the EU fast-tracking talks to avoid a transatlantic trade war. You have long-dated JGB yields are falling ahead of an auction set to test demand.
Beijing draws up plans to further boost its manufacturing might with a new Made in China campaign, even as President Trump seeks to bring more factories back to the U.S.
Plus, e-commerce in focus today with Meituan reporting better than expected revenue, but warning profits will suffer due to stiffer competition. Good morning. Welcome to the show, the Tuesday session, just under 30 minutes away from the open here. So S&P futures are just about the only material move we're seeing across the equity complex. Most of the Asia-Pacific, slightly lower, slightly higher. On aggregate, we're looking at a 10th of 1%. Although, that said, we've crawled ever so slightly higher in the recent days or so. So the September 2024 high is now within about 0.8% as I speak. We're looking at havens on offer slightly, 0.5 of 1%. The dollar is also weaker. In fact, we're now looking at, as we change the page, please, the weakest momentum on the U.S. dollar going back 7 years. We're talking about the 14-week relative strength index as far as that's concerned. Cash treasuries are up and running right now, and we're looking at a 4% handle on the 2 that goes all the way down here, so to about 5%. So that's well, you do the math, that's a term premium for you. Very quickly, the JGB stories emerged as one of the big themes, and we'll get into that in a moment here. But as you can see, substantial drop in yields, especially on the long, which might actually bode well ahead of this 40-year auction that takes place tomorrow. We'll wrap, of course, everything that's taking place out of Japan, plus the comments coming out of the BOJ governor in a moment. Very quickly, though, the approach to the open today, just under 28 minutes away. And yeah, so it's earnings. We have reverse repos, the injections coming out of the PBOC, 7 straight days now. And of course, at the top of the next hour, we just got word that the Chinese Commerce Ministry will be holding a briefing, so stay tuned for that. But before we get to that, lots more to discuss, of course.
Yeah, I mean, obviously what we're seeing in JGBs, right, and especially in the long end, are falling ahead of that auction, as Dave mentioned there. So is this 40-year auction really going to test the demand out there? Is it going to be people stepping in to buy? That certainly is a question. The yen also in focus after what we heard from the governor of the BOJ, Kazuo Ueda, who's putting rate hikes back on the table. Let's bring in our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Joohee. He's with us here right now. So we see a bit of relief in the JGB market, but then again, these comments from the governor seem to be quite interesting as well.
I think it's quite different because when we look at the JGB, especially the longer date, we can't compare to the U.S. Treasury. Because for Japan, there's this structural demand from the livers and pensions. They have been going overseas for dollar credit over the years because Japan has suppressed interest rate to 0. But now, finally, we are having inflation, we are having higher rates, we are having rate hikes. So actually, they can just come back and beat those demands. So the 20-year auction disappointed like a few weeks back or last week. But this time, like markets start to understand it's not the U.S. Treasury market. Livers will be there, pensions will be there, and even from an FX hedge perspective, foreign investors will be interested to bid the long end. Because right now we're talking about if you hedge your dollar exposure in yen, and then we're talking about longer end at about 6-7% in total compared to U.S. Treasury. That's really attractive. Like I would have gone in if I had the money.
Okay. Well, let me put that question to you. There's a 40-year auction today. Would you participate in a big way if you had the money?
I would, actually. If you tell me about it, 7% is really safe given what's happening. And especially if the BOJ hikes, actually that may slow growth a little bit, that may slow inflation a little bit. Longer end yields could stabilize on the back of that hiking.
So do you think there's a need for the BOJ to intervene or step in any way? They've been pretty restrained so far.
Not really. Like, they have the plan to keep QTing basically until they're going to announce the new plan in June, and then that's going to go all the way. They just have to leave that market because right now it's owning half of the JGB market. So that's why they have been doing the QT according to their plan, and they have to keep doing that. Any jitters, concern about them not doing it, they will just come out and tell market we're going to do it.
Next big move in dollar yen is up or down?
I would say rangy because right now it's actually at our fair value of 143.
Okay.
And also positioning is quite stretched. Yen longs has been quite stretched, so we think it's going to stabilize here.
Let's talk about the RMB because there was this interesting report about the need to increase cross-border settlements and the like. You have a report coming out.
Yeah.
How big of a deal is
this morning? Not really, to be honest, because the number right now is 30%. PBOC governor said it already in February. So it's 30% already. Like naturally, to go to 40%, like to our estimate, we will do it by 2027. So it's going to happen anyway. But why they are pushing now, it's obviously because they saw the dollar is being questioned. So it's a perfect window to push ahead of using the yuan. Now, but that's a different matter when we talk about whether it will help the yuan to rally, because we saw over the last few years, actually, the yuan globalization has risen. There are more usage in settlement, but the yuan has weakened against the dollar. So to your point, actually, like what's going to happen to the U.S., I mean, the U.S. might not be happy because the yuan will globalize, but it's not strengthening. So it's not going to help regarding the U.S.-China trade deficit.
Okay, Stephen Cho there, Bloomberg Intelligence Chief Asia FX and Rate Strategist. Again, I think it's really about this weak dollar story. That's the dominant theme whether you look at the Chinese currency or the Japanese currency at that. Right. A little bit more, of course, on the Chinese currency story. So certainly this report that we have learned that China is, to the point Yvonne was making earlier on, considering a new version of a master plan. What are we looking at here? Oh, the dollar. Oh, yeah, we could talk about this later. Yeah, the boat
has two scoops going on.
Yeah, two things are happening right now. But again, the point I guess we're making, since we're talking about the chart now, is that Stephen, you mentioned 143 fair value, the weakness in the currency. Because the dollar's weak is a window of opportunity right now. Let's bring in, and I'll take it back to the Made in China master plan. Min Lo, of course, our China correspondent, to talk us through this. So clearly, Min, this isn't going to address the trade imbalance of why we're here in the first place, having these trade negotiations between the U.S. and China.
Yes, the Made in China master plan that was first introduced in 2015, it comes to an end in 2025, and we understand from sources that China is now looking at a new iteration of this plan for the next decade to really map out its manufacturing capabilities, and it's likely to focus once again on high-tech manufacturing, especially things like chip-making gears, given those curbs from the US that has become almost a sort of national security threat to China. And this is, of course, despite those criticisms from the US that China needs to rebalance its economy to boost domestic consumption. In fact, this was something policymakers had acknowledged, but still there is this ongoing debate here. We understand among policymakers whether to put a specific target in terms of the contribution of consumption as a share of GDP. Here you can see on the chart that manufacturing still makes up about 37% of GDP, and sources are saying that they're planning to keep that stable in the mid to long term, and they're still not leaning towards putting a specific figure in terms of the target for consumption as a share of GDP, because they are just not clear whether they have enough policy tools to be able to boost consumption in a big way, and they are leaning on that tried and tested tool, focusing on manufacturing, which has been successful so far in contributing to growth, to job creation, and it has shown it has seen China really become the leader in many of these tech sectors, from EVs to solar panels and other sectors as well.
All right, Min Lo, thank you, our China correspondent there with the update. And meanwhile, we're tracking, of course, all things trade. The European Union has agreed to accelerate tariff negotiations with the U.S. after securing an extension for a deal deadline from President Trump. Now, at the same time, top trade officials from the EU and China are preparing to hold their own meeting early next month. Let's bring in our news desk editor, Jill Deesa. She's with us. Let's start on the EU and U.S. side of things. They're looking to fast-track things. What does that tell us?
Yeah, well, I think, what's been really interesting to see with some of these EU-U.S. negotiations is they kind of echo a little bit of the U.S.-China negotiations a bit, right? I mean, you go back to last month, you had Donald Trump, he was claiming that negotiations were going nowhere, so he threatened to raise tariffs at 50% on all EU goods. That's kind of where we were standing. Even just going into this weekend, you're seeing that really severe escalation. So what we did get over the weekend was a call between EU Commissioner Ursula von der Leyen and Donald Trump. Apparently that went very well, according to both sides, and so that's led to that 50% threat. Remember, that's threatening some $320 billion worth of EU-U.S. trade there. Apparently now that's been delayed to July 9th to give these two sides more time to negotiate. Now, the EU has said, obviously it doesn't want, everything to lead to these tariffs, but they've been really frustrated about trying to understand what is it that the U.S. really wants and who's actually speaking for Donald Trump most of the time. The The U.S. meanwhile saying, they think that they're being unfairly targeted by the EU with lawsuits and everything like that. It does seem like this at least gives them about 6 weeks worth of breathing room to actually ramp up and get that deal. So maybe you eventually see something like there. But yeah, certainly I think a bit of a cooling off of those tensions that we were seeing ratcheting up in the last couple of weeks.
And on the EU-China front, Wang Wengtao, of course, will be part of those early next month. What do we know about that?
Yeah, I think, at this point, obviously, you're still waiting to see how exactly the EU is going to gear up for those negotiations with China. I think at this point, the U.S. is really more their priority at the moment. But, it kind of harkens back a little bit to that G7 finance ministers meeting that we just saw in Canada the other week, where you did see, actually quite a bit of amicability between the EU, but also other G7 members. The U.S. It seems like Scott Bessent had a pretty good showing there, where really part of that group there was to try to figure out how to create some kind of a block, about how to challenge China in some ways. And so I think that may be top of mind for some of these leaders as they head toward those meetings next month.
There we go. Jill, thank you so much. Jill Deesis, there, our news desk editor. In fact, just on that note, coming up here in show is the market outlook, because Mirae assets, they've actually gone domestic with their investments because of the uncertainty out there in trade and tariffs. Joohee outlines a thesis for us. The opening bell just under 19 minutes away, Shanghai, Shenzhen, and here in Hong Kong. This is the China Show. Good morning.
What to watch in Greater China today? Of course, we're still watching what happens in the ASEAN Summit, and Li Qiang, the premier, is there, of course. That renminbi fixed as well. So yesterday we saw one of the biggest moves, the strongest since January, right? So where is the PBOC when it comes to this renminbi strength? It was still weaker than expected, though, so maybe not as much pushback, but certainly that's in focus here today, just given what we've been seeing in the dollar. Meituan EV stocks very much in focus. So the Meituan story, it was actually a decent set of earnings, but might likely be overshadowed by the outlook, just given how fierce the competition is in the food delivery space. EV stocks, that BYD firing that another shot at this EV price war certainly is something that's going to be dominating the industry here today. We already see the stock down some 8% yesterday in Hong Kong. Xiaomi is up in terms of their earnings. We have industrial profits coming out. And then, that May economic survey too, Dave. Yeah,
those are all coming out. In fact, you know what? So Macquarie will be joining us about this time the next hour. So they think nobody wins at this stage, given the Meituan story. In fact, the funny thing is, the fact that BYD, I'll put the BYD and Meituan story, right? So is what we're seeing in EVs now, is what we're seeing in solar now, is what we're seeing in battery now, where e-commerce or even deliveries headed in terms of the margin compression and the competition, right? So those are really key themes to watch.
And they had a lot of anecdotes from Macquarie in that report about, Douyin tried to get into this market in the whole food delivery space. And they're looking to kind of the successes and fails of that, to see how JD is going to do now that they've come up and they're spending big when it comes to those subsidies as well. So certainly that's the big question that we're watching out for when it comes to Meituan and the like. There you go. Offshore renminbi is doing this, 717 here right now. Your reference rate is at 1876, so that is in line pretty much from what the analysts were expecting as well. Let's bring in Joohee now, CIO of Mirae Asset Global Investments. She joins us here in our studio. It's interesting, Dave kind of teased this in the previous break, that because of all the sort of tariff and trade uncertainties, you've kind of shifted more in terms of domestic plays right now. Tell us what you've been doing.
So we made the changes late last year and then early this year. So there are two reasons. Of course, the uncertainties regarding tariff weigh on the attractiveness of the exporters. And secondly, if you just think about the last 4 to 5 years, and actually consumption and domestic demand related stories have been very weak, much weaker than the other sectors like technology or industrials in China, also in India, which are the major countries in Asian region. So there are so many, the reasons for that. But the key point is, from this year, I think from the government's perspective as well, these domestic demand sectors are becoming more important to boost the economy. So in China, for example, now we all know that for the last 4 to 5 years, export has been stronger than expected. So there's no kind of the big reason for them to aggressively boost domestic demand. But now they have to make the kind of more internal tool to have a less dependence on the U.S. or other external demand. And also in India, as we saw from early this year, this finally after 2 terms of the Modi, and finally this term, now they are shifting the focus to the domestic consumption from more investment-linked sectors. So that's the kind of background why we shifted our focus to more domestic demand-related sectors.
And how has that change worked out as far as performance goes?
Yeah, so maybe you saw some outperformers of BYD or Xiaomi or all those actually outperformed well. But in India, still the recovery in consumption has been much slower. But at least now we are seeing some signs of recovery. So, for example, over 90% of MSCI India index names they already released their earnings, but over 58% of that they beat the market consensus, which is much higher than the average level, and only 22% they missed the earnings estimates. And so even like earnings-wise, also now we believe it's kind of going through the bottom now. And also from the inflationary pressure perspective as well, it's still continue to go down. So that's why there will be no pressure from the RBI to cut the rates to boost the domestic demand.
So you think we bottomed in India? Because the market actually led the rally after Liberation Day from Donald Trump. It was one of the best performers. And I'm wondering right now, from an earnings perspective, do you think they'll catch up?
It will be very gradual, I would say. I want to add, it's not going to be like a V-shaped recovery, but at least, for the last 3 to 4 quarters, this market has been underperforming, while the other technology sectors or kind of manufacturing, AI, that kind of sectors were outperforming. So, but if you just think about how underpenetrated so many sectors are in India still, with a huge population, and then, governments, they are very aggressive in boosting domestic demand as well. And then also tariff issue, the uncertainty is also less. So even though they are still trading at a premium compared to the other countries, but we have to have a long-term perspective to India. So actually, usually our perspective to the India is much longer than the other the countries because, considering this kind of very positive fundamental reasons. Yeah.
You mentioned the shift to domestic. I looked at some of your top holdings, though. TSMC is still in there. And this is very much a very global sort of company as well.
Yes. Having said that, we shifted our focus more to domestic demand ones, but still we have a decent and then good exposure to some exporters, for example, in technology sectors or industrials. So, for example, TSMC is one of the examples in Taiwan. We believe that they have a bargaining power, which is strong enough to pass on the tariff cost to customers. And even though it's still under pressure from uncertainties regarding the JV with Intel and also the AI demand, or even there are so many kind of uncertainties that still a tariff, of course, is going on. But I think if you just consider their valuation, which is only like 14 times next year, I think downside risk is manageable. So for the next, 1 or 2 quarters until all the uncertainties become clearer, I think it will be, range bound or under pressure, but we still think that the upside potential is higher than downside risks. And then another example is also kind of transformer manufacturer in Korea as well.
I was going to ask you about, since we're talking about tech, NVIDIA's reporting this week. And so far, have you any key takeaways so far from the sort of the big tech earnings and what that means for TSMC, or is the bet on TSMC something else?
So I also traveled to Taiwan last week, so Computex, the conference as well.
Okay.
So I think that so far, the demand and all the tones of the companies and the AI demand is still very quite strong and rosy. But still, we have to see the final numbers of COA's, the expansion plan from TSMC. There are also 3 or 4 key factors that we have to keep watching. So I think for the second half, it's still possible that we are going to see some volatility in the second half. But at least in the first half, I think we still see the momentum to continue to be strong.
Okay. We'll have more from Joohee on. He'll be rejoining us in a couple of minutes here, of course, out of Mirae Asset Global Investments. We're about a minute into the pre-market, and yes, as expected, somewhat, of course, given the negative reaction we're seeing so far across most. We're looking at Meituan now down 5%. It's really the guidance here coming through out of the company. More of this, plus many other movers in this market. We have earnings coming through as well out of Xiaomi and Kuala today. The approach is one that is lower, 0.3%. This is the China Show. Okay, welcome back. So U.S. futures are better by about 1%. Let's call it that. The big story, though, is really in the JGB space with a rally about 13 basis points now in the 40-year yield in Japan. So just about across the board, especially on the long end, maybe the snapping back after just the weakness we've seen of late there. The pre-markets, flip the page, Hong Kong, Hang Seng Tech, Hang Seng China, and Dollar China with a fix that was really, let's call it immaterial to the relevance of the estimates today following the adjustment yesterday. We're looking at 0.5% to the downside on Hang Seng Tech Index. A lot of, I guess, changes to some from the sell side because of the earnings coming through.
I mean, they're still keeping buy ratings for Meituan in particular, but the price targets have been slashed quite a bit here across the board because you take a look at the competition. They were still able, in terms of the quarter, to get some decent food delivery volume growth, but the outlook seems to be pretty trying for the likes of Meituan when you have the likes of Alibaba, JD really coming into this space. So the likes of Morgan Stanley, that price target has cut to 192 now. AA Group also reinstated outperform at Haitong International, and Sandy Heavy raised to buy at Daiwa as well. In terms of stocks to watch, Meituan is still going to be the key focus. We talked about how the shares in the pre-market were down some 5%. There you go. That's certainly one to watch. Kuaishou's not doing too much. We're also watching MTR. There was a report about some outage, right? That did impact things for a few hours.
And I think they got fined for that.
So not much impact on the stock, though. Also watching Link REIT a little bit later on as well.
Earnings, that's an earnings story.
And China EVs. This is the big one, right? So BYD coming through yesterday, slashing the prices of all of their 22 models, right? At least by 20 or 30%. The cheapest Seagull hatchback now, priced at $7,700 something US dollars?
What?
So once again, what does this mean in this whole price war? Is everyone going to follow suit? You heard the likes of Leap Motor, Chang'an did follow suit after that. Are others going to have to follow, just given how much pricing power BYD actually has in this industry?
Yeah, there we go. Across the board, still some weakness there. And just a mention on, so Yvonne talked about Meituan, right? So at the current level of 123, it is set to open at below the lows of the year. So we're set to open at the lowest level since 2024 in shares of Meituan. To the point Yvonne is making, still buys, but at lower and lower price targets. The opening bell is just ahead. You're watching The China Show. Good morning.
Welcome back. You're watching The China Show. We're counting down the open of markets here in the city, and certainly one to watch is going to be the tech sector here today. We talked a little bit more about what's going on with Meituan, obviously with the EV sector and those price cuts from BYD. That's going to be front and center here today. Also, given our scoop about this new Made in China plan from authorities in China. What does that mean for the chip sector and some of these innovation sort of stocks here? That's certainly one key focus here today. The renminbi not doing a whole lot here. That fixing didn't do too much in terms of signals here this morning as well. But then again, we're going to focus a lot on the tech sector here today. Yeah, so Meituan and Xiaomi, of course, is the next one on deck. And I think we are expecting there on the top line of about, I think, 45%. Let's call it 50% rise in revenue. And of course, what they say about, well, a couple of things, right? I think it's the SUV, I think, that they're planning there on the, on the EV there's
space.
a lot of calls of how this SUV is going to really encroach on the market share of the Tesla Y, Model Y. But then again, the stock has been up, 90% in the past 6 months. So, has all that, good news been priced in already? Certainly there's going to be a lot. I mean, the options market is basically pricing, a 4.5% move in either direction. When those results do come out. So certainly that's one thing to watch. Onshore markets are doing nothing really right now. Shenzhen slightly to the downside. But watching the likes of CATL, those shares are slightly higher for another day here, but not really seeing a whole lot of movement. Iron ore is down about 1.5% as well. Not much direction to really tell you about. We talk about the melt up, or can you call it melt up in Chinese bond yields? There has been some more liquidity things that the central bank has been doing. Yeah, for I think 7 days in a row now, they've come in with liquidity going into Monday. So I've yet to see actually the figure for today, but they've actually guided and this is a bit technical, they've guided the 7-day repo rate closer to their policy rate. Right.
And the 20-day average is actually glide. Anyway, I'm not going to bore you with that anyway. But they have come in with, they've Xiaomi the money. Let's put it that way. In terms of, okay.
Let's go to the next board in Hong Kong.
Yes, there we go.
Just given what we've been seeing when it comes to HS Check and the like here. So we talked about Xiaomi. Meituan's the big one here. The price targets have basically been slashed by a lot of the analysts on the sell side here today. That's why you're seeing HS Tech slightly lower by about 0.4%. And perhaps that's why we're seeing Meituan down some 4%. That could be a big drag on that index as well. Xiaomi actually doing pretty well ahead of those earnings, but certainly we're watching very closely what happens with this price war with BYD and the like as well. Gives us to the next board, right, which shows us how the autos are doing. We already saw the initial reaction yesterday, that 8% drop for BYD after reaching a record basically last week on the stock. We're seeing another day of declines, but not as big as yesterday, but still a downside of about 0.7%. The rest of the EVs still doing okay this morning, Dave.
Yeah, it looks like we're getting some buying at the margins here because of the drop that we had yesterday. Okay, very, very quickly here. So 3 things to watch. One is industrial profits are out. This is for April. We're up 3%. That's year on year for the month. Jan to April coming in at 2.12 trillion. So that's about a 1.5% improvement from the same 1, 2, 3, 4 months in 2024. Number 2 is top of the next hour. We have the Ministry of Commerce briefing. And of course, we're also watching HIBOR in the 11 hour, which is down. We're almost done with May. It's only been down twice. Well, only up twice. Okay, yeah. I'm getting confused now, which means it's Yvonne's turn to take over.
It's okay, I got you. All right.
Thank you.
Still with us is Joohee, CIO of Mirae Asset Global Investments. We talked about a little bit more about the domestic plays, and certainly one thing we're focused on is, of course, the consumption side of things in China. Is it still opportunities there?
Yes, I think that we have to keep the long-term perspective to consumption opportunities. So because compared to the other sectors, the consumption and consumers' mindset and behaviors, patterns, actually the changes are much slower. So now, again, for the last 4 to 5 years, it has been very weak. And then now we are going through the inflection phase, I would say. It's not an inflection point. Yeah. So, because of the governments, they need to put lots of efforts to restore the confidence. And but luckily this time, the very friendly gesture to private companies early this year in China, actually it's very helpful and very meaningful for consumption as well, because now I think the burden to hire more people or kind of, like the improve the income growth, that kind of burden can be shared by private companies, which is cash rich. Tech companies, for example. So I think the government, at the same time, they can just take care of the risks coming from property or local government debt issues. So now I think it's step by step. They are going to do more and more. But the thing is now, because of the delayed negotiations, the tariff negotiations between China and the U.S., I think that implementation of this, very aggressive, the stimulus plan in China is also being delayed. So I think in terms of timing, initially we thought maybe at the end of the first half or early second half, but it's kind of keep pushing back in terms of timing.
That's interesting the way you phrase it. I'm sorry to interrupt. For a long time we talk about how China's using its banks in terms of national service, right, to help boost the economy. And to some extent, like what you're saying, correct me if I'm wrong, is that they're outsourcing some of the subsidies for consumption to the private companies themselves. That comes at a cost of margin, though. And I think the question I have is, are you concerned about margin pressure?
It's not the margin pressure. If the reason that the private companies, they didn't really hire the people or they didn't really spend on capex, it's because of lack of confidence also. Because if you remember in 2021, the big regulatory crackdown on private sector as well. So now they are, the kind of, the negative things are being restored. So that's why I think they want to invest a little more, and then they want to hire more people. And especially in tech sector, they need more younger people. And then now the unemployment issue is actually more material in youth, the sector. Yeah. Right. So that's why I think the kind of the positive, virtuous cycle is going to be created from what we saw early this year. So I think it's going to be very gradual again. The consumption story is always, But the direction-wise, I think it's going to be different from what we have seen for the last 4 to 5 years.
What is the playbook then? I mean, I know you're looking at tourism, you're looking at cosmetics. in sort of these domestic plays? Why these sectors?
Yeah, so first of all, I think the people, they tend to spend more on experiences rather than goods. So the tourism is one of them. And also cosmetic is a goods, but actually, they want to take care of their kind of the beauty or inner beauty or health. So we have more exposures to healthcare or kind of the consumer services in China, in Korea, and also in India, across Asia.
Just a hard pivot here, the other thing I want to ask you is, how has this melt up in treasury yields affected what you do?
So I believe the impact, of course, usually the general impact on equity is negative. But I think from our the investors in Asia perspective, I think it will be less than we saw in the past, because now very unusual divergence between the treasury yield and US dollar.
Yeah.
So that's why I think because of that, I think the central banks in emerging Asian countries, they have less pressure when they cut the rates to the boost the domestic demand, because now their currency is relatively strengthening. So that's actually less negative than we used to see in the past. That's what I can say.
And for the dollar, is the path of least resistance still for the dollar to go lower?
Sorry?
Is the path of least resistance for the dollar still to go lower?
It really depends on the further progress in the tariff and all the policies from the U.S. But I think that is very hard to predict. But at least this time, so many people and then the government and central banks, they find that it was trigger for them to think about, I need some other alternatives. So the trend-wise, unless we are going to see very swift the conclusion of the tariff, and then they are going to do more market-friendly policies like tax cuts or deregulations, because those three are kind of needs to be more balanced. So now, although the timing of those market-friendly ones are being pushed back, but at least they have to do it considering the midterm election next year. So it really depends on how fast they are going to conclude the tariff, and then they move on to the more positive ones. Yeah.
Have you seen in your strategies inflows of AUM and funds because of this U.S. exceptionalism fading away? And actually the other question there is, do you see a catalyst that might spur a reversal in those flows back into the U.S. at some point this year?
But our investors, finally, they think about the non-U.S. assets. So many people, they are getting out of the U.S. exceptionalism. So that's why I think the inflow-wise, so far it was not very, very material. But I got lots of requests from our clients, our investors, that they are more interested in China or other non-U.S. assets, including equities. Yeah.
Okay, fantastic. Thank you so much. It was great there with Joohee on there. We covered everything. CIO of Mirae Asset Global Investments. Right, plenty more ahead here on the China Show. We're looking at markets slightly to the... Give me 1 second while we shift the page. Well, no, nothing's happening. There we go. I was about to say. Okay, thank you. We'll see you on the other side of this break.
We are checking Meituan shares here this morning under a bit of a pressure here after those results came out, despite being upbeat in the March quarter, right? But certainly the outlook and the guidance from the company is why we're seeing the stock down some 2%. But off some of the lows already for the stock, the food delivery giant is warning of a hit to profitability as it pushes ahead with global expansion efforts. Let's get more on the numbers and bring in our tech reporter, Annabelle Jewelers, on key takeaways for you.
Well, I think it's really, as we know, the company's got some very ambitious global expansion goals, and that's sort of weighing on the outlook and why you're seeing that share price down today. But essentially, the company outlined these further. So already we've seen the expansion into the Middle East. We've seen it here in Hong Kong, for instance, with the success of Kita so far. And now they're going even further afield. So we're talking about Brazil, for instance. But all of this costs billions of dollars. At the same time, you've got intensifying competition at home with JD, for instance, Alibaba pushing into food delivery. And so this is going to be really impacting their profitability in the shorter term, and that's what they flagged as well on the earnings call, even though they say short-term pain, long-term gain. That's their strategy.
They've moved the goalpost though under price targets.
Well, analysts have, yeah, and that's again one of the things that's probably playing into the market reaction today. But if you take a look at the number of analysts, for instance, that have cut their price targets, there's some really well-known names. JP Morgan, for instance, Morgan Stanley, Goldman Sachs, Citi, all of them have reduced their price target overnight, even though you see them keeping with their buy rating. I mean, you've got to also point out there's 55 buy ratings on this stock, only 2 sells, 4 holds. But you can see, Dave, I mean, you've done a really great chart there. Thank you.
No need to mention, but yeah.
He just did that while Bell was talking. He multitasks to the limits all the time. That's what we do here on the China
I'm also
Show.
doing something else now,
Bell,
breathing.
Yeah, Xiaomi's up next. Obviously, this is sort of an EV play now in some ways as well. But what are we expecting? Because there's some pretty frothy expectations already on the stock.
Well, yes. I mean, Xiaomi's had an absolutely stellar run, really, over the past several months. You're talking about nearly around 90% up from the second half of last year. This year alone, you're up around nearly 50% year to date. Again, there's a lot of different threads that you can pull on here, but EVs is going to be a really key one to watch, and I think it's going to be really interesting when you get that revenue today. Again, the consensus here is that we're going to see revenue of around 109 billion yuan for the period. When you do get that today, break down and have a look at how much EVs starting to contribute to the bottom line, because that business category is now expanding even faster. And last week, of course, we had Li Qiang, the founder and chairman, laying out the EV ambitions. They're introducing a new SUV, and also, of course, a smartphone processor, and looking to replicate what Apple has done, replacing Qualcomm components. Again, I mean, it's a company that's been extremely successful. You can see it there year to date.
Bell, thank you so much. Annabelle Jewelers there you have Meituan and also Xiaomi. In fact, it just takes us naturally into the BYD and EV story right now, with I think we're tacking on losses right now even further for BYD, down 8%, I believe, yesterday, down a bit further right now, coming on your screens very, very shortly. So you have these price cuts coming out of the market leader, and that's really leading to these conversations right now. What is the impact going to be overall on the sector? As you can see, BYD is down 2.6%. And some of the others that were actually slightly higher earlier on are now in the red. Let's bring in Danny Lee, our EV supply chain reporter, right now. So what's the next thing we're watching out for here after these price cuts?
We're going to have to see who else will follow on with these price cuts, and where do we go from here for BYD. So BYD, having this first mover advantage, is very much in the strongest possible position to get the market to follow with it. And so therefore, given its strength, it is able to potentially undermine a whole slew of competitors and also just consolidate that market share. We've been talking about consolidation for quite some time now. So therefore, how is it able to use those pricing tactics to continue to squeeze smaller players? And also, as it looks into the longer term, that year-end annual target of sales, which is to be at 5.5 million. So there's still a long way to go. And so how can it use that pricing to really push ahead and bully its competitors?
How is this going to play out for the whole sector in particular? Are there particular names you think that can actually emerge out of this still doing pretty well? I mean, where does this go?
Well, we've seen the likes of Geely and Leapmotor, Li Auto as well. They've all done really well, relatively speaking, to their kind of monthly sales numbers, having gained a lot of strength in the recent months as we've seen this renewed competition. But I still feel that a lot of the automakers are still healing from a very bruising price war over the recent past. And we've seen some of the data in the inventory being held by dealers, 57 days of inventory being left in stock last month, which was the highest since December 2023. So they're all churning out more products, but they're not necessarily selling them as quickly as possible. So there's a bit of a froth in the market. And I think that's the biggest challenge, is how do these automakers be efficient, offload stock, but not try to undermine their margins at the same time?
All right, Danny, thank you. Our Bloomberg EV supply chain reporter, Danny Lee, there with the latest on, of course, this price war in the EV sector. Some other corporate stories that we're tracking for you. Hong Kong subway operator MTR has reportedly been hit with a $2.4 million fine after a 5-hour suspension on one of its lines last week. Now, the incident was the third disruption in 4 months caused by technical failures. The South China Morning Post also reports MTR has been ordered to offer a day of half-price fares. HKBN CEO and co-founder William Yeung has told Bloomberg that he thinks China Mobile's takeover proposal undervalues the company. In December, China Mobile made a general offer to buy all of HKBN's shares of 67 US cents each, valuing the company at about $875 million. HKBN has also attracted interest from other suitors, including I2 Capital. Hong Kong's stock exchange is looking to launch options that expire within a day as soon as the first half of 2026. Sources say HKX is planning to start offering so-called 0 days to expiry contracts on the Hang Seng Index. The board says there is strong demand for shorter-dated contracts.
Okay, there's a peculiar move taking place, not just, and we'll show you the Chinese currency in a moment, but I suspect it's not just the Chinese currency because I'm looking at Euro dollar is down, dollar yen is up, dollar yuan, as you can see on your screens, is up. Bloomberg dollar index is certainly catching a bit. So we're trying to figure this out, but as you can see, it's quite a sizable one, which started about 10, maybe 11 minutes back. So we'll try and figure this out. But yes, this is what we're seeing so far across these FX markets. Plenty more ahead. This is Bloomberg.
Some global headlines that we're following for you today. German Chancellor Friedrich Merz says Ukraine has been given permission to use weapons given by its allies to strike deep inside Russia. Ukrainian President Volodymyr Zelensky has long appealed for this authorization, which has gained traction with Russia's latest barrage of drone attacks and President Putin's refusal to engage in serious talks. The Kremlin has brushed aside criticism of its drone campaign, calling President Trump's latest comments an emotional reaction. Trump on Sunday said he was considering new sanctions and called Putin, quote, absolutely crazy for needlessly killing people with his escalating attacks. Major power companies in Singapore, Malaysia, and Vietnam have agreed to explore renewable energy links, especially wind power, across their borders. The agreement is seen as a critical step for the region to meet ambitious climate targets while supplying growing demand in sectors like AI and data centers. The pact was announced on the sidelines of the ASEAN summit in Kuala Lumpur. And NATO Secretary General Mark Rutte says that the alliance will look to adopt a higher defense spending target of 5%, meeting demand from President Trump, once seen as unrealistic. The proposal includes a 3.5% target for hard defense spending and another 1.5% for related outlays. The Dutch government has said that Trump plans to attend a NATO summit next month in The Hague.
Okay, let's, some latest lines are coming through here out of Xinhua News. This is, of course, Chinese Premier Li Qiang. He is, of course, in these ASEAN meetings. On Tuesday, this is between China and Cambodia, that will jointly respond, is the headline here, to external uncertainties. That meeting, of course, that took place between the Chinese Premier and the Cambodian Prime Minister. Li did urge the two countries to jointly promote their economic development. And yeah, I mean, well, this is so far in this very, very short statement so far that's come through. And of course, Avril Hong, of course, our colleague, is on the ground for us there to cover this for us. We'll talk more about that later. Apart from that, this dollar reversal story is one we're trying to get into as well. And top of the next hour will be the Commerce Ministry briefing on, I believe, innovation coming out of China. So we're just getting warmed up here.
Yep, you take a look at what is moving these markets. You mentioned about that Commerce Department briefing. I mean, this is on the back of the scoop that Bloomberg talked about how they're considering this new master plan to boost production of these high-end tech goods, right? So that's despite, of course, this whole U.S.-China discussion and the U.S. calling for China to rebalance its economy. This is what the chip sector is doing, not seeing a whole kind of clear direction right now. SMIC is slightly higher. But the big news really has been in the China EV sector, right? So the BYD sort of story, how they're slashing prices of all their models, that certainly is leading to more downside for the stock.
Yeah.
BYD is down some 2% right now. We saw 8% drop yesterday. So we're off the record highs that were set last week. Geely is falling in favor as well, but you're seeing a little bit of relief with the likes of Xpeng today. Xiaomi could be a different story leading up to their earnings later on today, but expecting quite a bit of, maybe they have to deliver really, given just how high the stock has been already right now.
Okay. Yeah, so I think the interesting thing about BYD as well is, you know, a lot of people have been waiting for a dip to buy, and certainly this drawdown we're seeing in the stock, I'm just doing that measurement right now here, on my chart, give me a sec, is now actually, here we go. We're now down 10%, over 10% on shares of BYD. And the other thing that's interesting, too, that's emerged because of the rally before the last 2 days is BYD's now, I believe, in Hong Kong, trading at a premium to the one that we have on the Asia market. Right. We'll set that aside for now. The other stories we were pointing out is the market reaction to the Meituan story. A couple of earnings are on deck today. You have Kuaishou. You have Link REITs is also set to report earnings later today. Right. Apart from that, we're looking at, so you have a commerce briefing, and I think the HIBOR conversations, one that we'll probably get into, should be, I think we're down every single day with exception for 2 days here.
Yeah, certainly that bodes well for the property sector. That's one thing that we're watching very closely as well. But you bring it back to what we're looking at. I mean, it's going to be the JGB market that, in terms of the global impact that we're seeing. We're seeing a bit of relief here. This melt up in yields is definitely taking a bit of a pause. But when you have the BOJ signaling that rate cuts,
rate hikes,
rate hikes are back on the table, where does that leave the direction of travel now for the JGB market ahead of this big auction, the 40-year on Wednesday? Yeah,
that comes out tomorrow and following the 20-year, which was really wanting that we had last week, the lowest bid to cover ratio going back to 2013. I suspect that's going to be a big catalyst when we get to that story tomorrow. Plenty more ahead here on The China Show. Good morning.
Welcome back to the China Show. Here's a look at the HSI half an hour into the session, and nothing really to look here. We're seeing a little bit of upside when it comes to your 8-share market. Not really, though. We're barely talking about too much. Quiet. We're waiting for any sort of update on these EU and U.S. trade talks, obviously. The JGB market has been quite active, just given that relief that we're seeing in JGBs. But the dollar, in many ways, Dave, continues to edge lower here this morning, too.
Yeah, that's an interesting story because I think that's a good pivot away from the equity market where, as Yvonne is pointing out, there's really nothing. And something, sometimes that's a good thing, right? Sometimes we don't have to force a headline coming through. It's been a very, very busy news year so far. So when we get a day like today where there's nothing going on, that's more than a blessing. The other story that keeps giving, though, and this takes us into the FX markets, right? 14-week RSI on the Bloomberg Dollar Index. I was just toying around with this earlier on. So we're actually at 30. That's the weakest momentum in the U.S. dollar going back to 2017, 2018. So are the technicals starting to play out? Because there's a clear move that's taken place in the last, let's call it 30 minutes or so in the FX markets. In fact, let's start things off with the euro. Intraday look, at one point we were above $1.14 on this one. And as you can see, you're going to see a dip lower, a bit across coming through in the U.S. dollar. Do we have that up, please, if we can? And then we're also coming off now the lows of that dip lower in the euro. So at one point, we were trading at 114.07. And as you can see, we're coming off a little bit. That's quite a sharp move that we've seen. That's about what time is it now? 9:38 local time. So that's about 23 minutes back now. Same thing. Dollar yen, 142.60 was the peak thereabouts for the session. See a dip there. And as you can see, we're picking up a little bit right now. This is on dollar yen, 142.28. On dollar China, it's a similar looking chart. 117 and change, 100 pips to the upside to about 718.24 right now. So again, we're trying to figure out what's behind this bid across the dollar. It could also be thin liquidity at that, given so far on news flow, there's really nothing much that indicates anything that would suggest why we're getting almost across the board move here in the U.S. dollar, Yvonne.
Yeah, and certainly we're watching very close to the euro, right? Because you heard from Christine Lagarde talking, trying to elevate the euro in some ways as maybe being that dollar substitute, right? The alternative right now. And that certainly has elevated. And we've seen the euro actually climb. It's not even just when things are risk on, but it almost has that sort of haven sort of I guess you could say, profile right now when it comes to the euro, now that we are trading around that 113 level. But your dashboard is looking like this, right? Stocks are not doing much. U.S. futures are still punching higher. We'll see how that reopen fares out after, of course, they come back from that holiday. But yeah, certainly the euro and where can it go is the big question here today as well. We talked about JGBs. The Treasury market is actually heading lower in terms of yields here right now. And that's basically what we're seeing that's bid when it comes to bond markets here in the region. And gold also coming off some of the highs that we've seen of late as well. For more on the market reaction or lack of thereof, let's bring in our analyst strategist, Mirae Nicola, in Singapore. Mirae, it's a quiet day, so we could talk about some big themes, but what is top of mind for you today?
Yeah, I think, as you guys mentioned, it's really about the dollar trend and that underlying weakness that we're going to continue and likely to see when it comes to the dollar, because at the end of the day, the investors are concerned about trade policy whiplash. They're concerned about the fiscals in the U.S. So all this is compounding the dollar weakness, and that trend is going to continue. If you see the other day when we got the reprieve on the tariffs from the EU, the U.S. EU reprieve, we didn't see a significant bounce back in the U.S. dollar as a result, because the underlying trend is still there. The concerns about how U.S. policy unfolds is forcing investors to look elsewhere, and that's going to continue to put pressure on the dollar. And we've seen the gains in Asian currencies as well over the last few days, and that's likely to persist.
Okay, well, give us a context then. How high will the euro, can the euro go against the US dollar? Again, the other backdrop there too is the ECB is cutting interest rates, which is counterintuitive, of course, to the move, not so much to the underlying.
Yeah, I think it's interesting now that rate differentials have been completely thrown out the window, essentially. So you have higher and elevated yields in the U.S., but that has essentially become irrelevant in this context, because what we're seeing is that the main driver of the currencies now is just policy volatility, and you've seen the key implications for what's happening is the changes in U.S. policy that's been forcing investors to look for bids. So that's where you're coming in for support for the euro, for the yen, and that's why I think there's plenty of room for them to run as a result. So if you look at euro dollar to, of course, to 115, 120 doesn't seem unfathomable, especially at the start of the year when lots of people were talking about parity. The key thing, though, for the euro is still going to be, do they deliver on growth, especially for Germany? So far, we have seen is that there has been some decent upside surprises. If you look at the economic surprise index in the euro, that's been a positive for the euro. But if you look at just in terms of fiscal policy expansion, especially for Germany, that needs to be able to counter the impact of euro appreciation, because of course, at the end of the day, if you look at the eurozone economy, it is still a large open economy that is dependent on trade. So a lot of the other things will need to offset it. And then, of course, you do have a tailwind coming from the ECB cuts, which is helping in terms of aiding growth. So that combination could really push the euro even higher.
I want to get your take on JGBs, Mirae. You've been writing about that as well. We see a little bit of relief given this relentless melt-up in yields in Japan. But then you have the Bank of Japan governor talking about rate hikes are back on the table. Where does that lead to the direction of travel then?
Yeah, I think you still see increased volatility in JGBs. I don't think that's going to go away. You have inflation numbers at the end of the week from Tokyo, and that's likely to show that inflation remains elevated. So, of course, you're going to have increased pressure on JGBs as a result. As long as inflation shows its ugly head, and then you have stagnation, that even compounds the impact on JGBs, because obviously a stagflationary type environment is bad for assets like government bonds and especially. So I think if you have stagflationary concerns really coming back to the fore, you're going to still see an increased pressure on JGBs. And of course, the auction that's coming up for the 40-year auction, we had a really bad auction on the 20-year. So if we see that really faltering, that's just going to exacerbate the pressure. But really, it'll come come down to what we're seeing on inflation, and it doesn't look good for JGBs.
Mary, fantastic. Thank you so much. Mary Nicola in Singapore for us. Just on that very last point that Mary was just making there, the 20-year JGB, the auction last week is why we are, I guess, in many ways excited or scared to see what happens tomorrow for this one, because it was a terrible one as far as bid to cover, lowest in 13 years given the conditions that Mary's
Stephen Chu from BI mentioned, right? I mean, what are the lifers and all that doing,
It's a different
right?
dynamic, yeah.
Maybe there is a bit of attraction to come back and step in at how high these yields are right now, and maybe you can go against the trend of that widowmaker, right? So, who knows?
He was a willing buyer, though,
He
right?
was.
Yeah.
He was quite optimistic about it.
He could auction some of his expensive glasses and use those proceeds
To buy some JGBs.
to maybe do it's a nice pair trade. There we go. Anyway, coming up here, we're talking private equity, we're talking real estate with Gaw Capital. So I'll be lots to discuss with them, right? Fundraising environments, or what they plan to do with a lot of the capital out there. Christina Gaw joins us in a couple of minutes. Stay tuned for that. This is The China Show. Good morning. Welcome back. You're watching The China Show. We're trying to figure out some things here in the markets. Well, for one, let's take a step back from a very quiet day in public markets. Talk about private markets for now. So a private equity firm, Gaw Capital, is raising money for a new real estate fund targeting, get this, $2 billion in commitments. Joining us now is Managing Principal and Global Head of Capital Markets, Christina Gaw. Good morning.
Good morning, David.
Very, very nice to see you. So tell us about this new fund.
Sure. Now, first of all, I wanted to say that fundraising is never easy, and I think in the current environment of macro challenges and all that, it makes it even harder. But I would say that the market in fundraising is also about supply and demand. So in the last few years, there's been a lot of industry consolidation. You have seen that large global funds are raising very big amount of capital, but it also, in a way, make ways for more of the specialized manager and regional manager who focus on a lot more on-the-ground presence to actually have their own nimbleness in able to find very, very good opportunities. So actually, Bloomberg is the first one to leak our launch of Fund 8. Although normally...
Reports.
We're doing our jobs, Christine.
Yes.
Although normally I don't talk about fundraise openly, but since it's already in the market, so we are raising our flagship Fund 8. And I think importantly is also to note that this has been 20 years in history since our founding in 2005 as a firm. We recently have actually gone through a massive rebranding exercise to celebrate our 20th anniversary. And the significance of that is that we also changed the logo into a much more modernized looking logo. But that is also to show that in the 20 years of evolution, other than doing real estate, which is our bread and butter business, we have also grown into other regional markets in Asia Pacific over the last decade in a very significant way beyond Greater China. And also we have diversified our product lines into real asset inspired sectors like infrastructure, secondaries, growth equities, and private credit, which we have been very active in the last couple of years. So all of those different verticals are managed by different teams independently. So we are actually simultaneously also raising money for opportunities in those sectors as well, alongside our flagship Fund 8.
You mentioned how fundraising is never easy. Can you tell us a bit more about how things have been so far then? I mean, you have a $2 billion target. How much have you raised so far? Where is the money coming from?
So we're definitely currently, because we just launched it, so we're mainly working on existing investor re-ups. And we basically are still looking pretty encouraging. I mean, I would say that if you look at the tariff war since its breakout, actually, we have had a lot of activities. We have hosted our AGM where global investor base came through. And when we ask them about how they feel about what's going on in the market, they generally feel that, US dollar-based assets have been a majority focus in their portfolio probably in the last 2 decades because of low rates and all that. With things changing right now, they're actually seeing Asia Pacific to be increasingly even more important in their portfolio allocation. Mainly because if you look at the interest rate cycle, while US is staying higher for longer, but certainly around the Asia region, we are actually seeing interest rate coming down, especially China, which is actually pretty positive for our sector.
But given just what the environment looks like, how does the environment for exits look like? Is it still looking pretty weak?
Very good question. So actually last year, while we are not necessarily focusing on fundraising last year, 2024, this year we are, but we have been focusing a lot on making disposition and giving money back to investors as well. And in fact, we have sold about $2.2 billion worth of assets disposal last year, and 45% of that is actually coming from Greater China. On the other hand, which means that activities is actually there in the domestic market. But on the other hand, we are also making new investments in selective sectors. For example, the living sector, which has been much talked about. And we have been making new investments in China as well, in terms of the four rental markets, and as well as life science sector as well. So there are a lot of activities domestically happening. I think I would say that in these kind of macro challenging environment, it also gives way for regional managers that have on-the-ground presence and to bring out our competitive edge more fully in core competency. So things are looking better, I would say, this year.
You mentioned higher for longer in the U.S. and rates elsewhere are actually falling. Is the cost of capital and that being elevated in dollar terms, is that affecting, the currencies you're raising, the hurdle rates for those investors? How are you looking at that side of returns?
Actually, to be honest, when interest rate is coming down for the Asia region, for example, and China as well, it also means that cost of capital is actually lowered, right? And in fact, if you look at the currencies, I think in the past, for the longest time, it's very, very difficult to hedge currencies for a lot of the Asian currencies, for example, but it's now looking more possible because of the differential in terms of U.S. rates staying higher and Asia a little bit lower.
Okay. So it sounds like, are you continuing to invest in China? In one thing, or is there a need to actually invest outside the mainland now?
So China is always a market that we definitely care about. It is a big market, and despite that, there are certain investors that currently avoiding it for geopolitical dynamics. But there are also certain regions investor, for example, the Middle East, remaining very positive about China. To a certain extent, if we look at the activities domestically, it has been active. Like ever since last year-end's DeepSeek moment, we continue to see positive news coming along, especially with the recent large IPOs coming along in Hong Kong Stock Exchange, which we are very, very encouraged about. Following CATL, very good performance aftermarket. Obviously, there's more to come. This is actually bringing back much better sentiment and opportunity into the Greater China region as well. And in the last few years, we also spent a lot of time developing the renminbi domestic channel, because we have a very large team in China with 20-odd years of investing there already actively throughout cycles. We are still very encouraged that the domestic market is active. The domestic channel was able to allow us to still invest and divest, which create liquidities. So, and we also, with the 20 years of relationship with China, with a lot of companies as well, that could be our tenants, a lot of the companies that are successful are actually also trying to expand outside into the ASEAN region, as well as into the Middle East region, which are friendly to them. So we are actually able to act as a bridge to help those companies locate or expand into those regions, which I think it's positive as well.
Well, speaking of bridge, talk to us about Middle East interest in China.
Middle East interest in China.
Yeah.
Right. I mean, it's all public news. There has been a lot of large transactions that actually happened from the Middle East investors that are mostly global sovereign wealth funds into China. But I think more excitingly as well, for sort of a broader market perspective, is the opportunity in the Middle East, actually. The interesting thing is when I woke up that first day when the tariff announcement came out, that was like, I think, a month plus ago, and a lot of changes are happening every day.
April 3,
Right, exactly. So the immediate thing that occurred to my mind when we have a partners group chat, by the way, among the 4 equity partners in our firm. And the first thing I read in the group chat was, I have, of course, my brothers are the deal guys and Humbert in China. They were looking at like, what's the effect to our portfolio? Whereas in my mind, because I'm the business development person, I'm like, actually the Middle East is the shining beacon. That was what I was thinking that day, that morning. And true enough, of course, in the last couple of weeks, we have seen the world global leaders visiting there, forming deeper relationship, deeper ties. So to me, or Gall Capital, we have actually covered the Middle East region since 2009. That has been a long time. So in the last 15 years, it was mostly going there to get capital. But it also means that we have formed deep relationship with the global sovereign wealth funds, which at this moment in time, when after COVID, the government there has really opened up the economy and did amazing, efficient and effective legislative reforms, attracting a lot of global talents going in there. It is partly also because the UAE is the first place that opened up during COVID time. So attracted a lot of talents going there, and they stayed. Of course, the attractive tax regime is always very, very attractive for young people that is trying to build up their wealth, right? So from that standpoint, I think it offers up a lot of opportunities for companies in Asia, in China, who wanted to expand because they are doing well in the domestic market, to want to have a foothold elsewhere as well. And so, again, because of the deep-rooted relationship that we have formed, we are probably able to be the one that helped them to go across.
You just made your first acquisition into the Middle East.
Exactly.
I wonder, what does it tell you about domestically the commercial real estate market in China? I mean, what's your outlook on there?
Yeah.
And here in Hong Kong, too.
Right. So let's go for China first. So the mildly positive thing is that because of all the domestic good news coming along, domestic sentiment definitely has improved. So we have actually seen our commercial assets occupancy definitely improving. Data center as well, that it was pretty challenging for maybe two and a half years, but we have definitely seen occupancy coming back up because of different companies, technology companies able to grow, especially with DeepSeek. A lot of corporate that work on AI is actually able to grow now, so that definitely sends positive signal to the commercial market in China. And again, as I mentioned earlier, because rates are actually coming down in China, so to that extent, you have a better chance of kind of getting to that. Back to that equilibrium, right? So now it's like we need liquidity, right? And domestic liquidity is there, as I mentioned, but they are also very focused on different sectors that they want within real estate. So we're working through that. And I think, the Shanghai Stock Exchange is also pretty creative in coming up something like called private REIT. So that is also a potential channel for liquidity to improve as well in the different sectors of real estate in China. Hong Kong, the talent program is going well. Definitely people are coming over from innovative industries. And of course, the IPOs are important. And we are very, very happy that Hong Kong Exchange is really doing whatever they can and attracting very good IPOs coming back to Hong Kong, which generally will put some positive spin back into the office sector. We are hopeful.
Yeah. Yvonne was just there at the exchange last week.
Happening.
Talk to us about the party that happened last week.
All these bankers were so happy. Every picture they took was,
we're back,
thumbs up.
It's been a while.
Money Qiang was so happy,
Yes.
We started that conversation on the 8th fund, $2 billion. What's the focus of that fund? Any specific assets or geographic focus that you're looking at?
Yeah, so of course Greater China will still be featured in that fund, and for certain investors that may or may not like more or less of it, we could have separate discussions on that, but it's definitely part of the Fund 8 strategy. But we definitely put a lot of focus and have been putting a lot of focus in Japan, Australia, which we have actually built a pretty big business there, especially Japan, where, again, public news, we have put in investment into a local asset manager so that allow us to potentially create yen products, domestic products. We basically realize that as globalization is deglobalizing, so to speak, we are also working ways as a Asia-Pacific regional manager to make sure that we allow ourselves to have ability to invest domestically with domestic money in the different big markets. In Australia, we have been successful in building out senior housing platforms. So again, it's part of the living sector, so to speak. Exactly. Yeah. Vietnam remains to be a very good strategy. It's not a very big market, but it definitely adds alpha to a commingled fund. And we have had very good success in terms of factory warehouse sector that we have done well. We have built from ground up, built a portfolio, we have sold, and we intend to build more despite the tariff was adding some uncertainty, but I think the direction is looking better and better.
I'm curious.
How much more in terms of what? In terms
you
of
said
amount?
you're looking to build much more.
Well, okay, it's by amount, okay? Let's say $2 billion, 10%. in Vietnam. That's realistic.
Commingled, yeah, adding the alpha.
Commingled.
Christina, we got to go, but thank you so much, Christina Ga there, Managing Principal and Global Head of Capital Markets and Co-Chair of Alternative Investments at Ga Capital. We're going to mark some Meituan shares, of course, continue to see some pressure here on the stock. There you go, never mind. I spoke too soon.
What are we doing?
We're flat now. This is Bloomberg.
No. 'Right, welcome back. A statement out from the cyberspace admin of China that China is vowing to crack down on the problem of privacy leaks online. It's asking Tencent, Baidu, and others to effectively crack down on those leaks. So we're looking at shares. Not a lot of reaction there so far. We've been kind of all over the place, though. This is a separate story in Meituan. We'll talk about that later. Plenty more ahead here on The China Show.
$11:29 a.m. in Tokyo. Japanese markets are heading to that break, and I guess you could say they're a bit relieved on what's been going on in the JGB market here today. But yeah, stocks are just slightly lower. We're watching the yen, of course, and some of the crosses there here this morning, and still seeing a bit of strength in the currency. But yeah, it's all about the long end of that JGB curve, right? So now that things are off some of the highs that we've seen in terms of this yield, what is this 40-year auction going to bring us tomorrow? Are we going to see some sort of demand, right? But there you go. Particularly in the long end, you're seeing an almost double-digit basis point drop across the board there for that 30-year as well. Yeah,
ahead of the one tomorrow, which I'm semi concerned about, and I might just call in sick.
You're going to do a Mark Cranfield. Just don't show up.
I don't want to be part of this at all.
Well, maybe you do.
Do not have the emotional bandwidth, though, to deal with a really lower bid to cover.
Get over yourself.
How dry is our life? Actually, so what's today? Tuesday?
Yes.
We actually have a big day tomorrow.
We have.
Yeah.
You cannot call out sick day. We're going to the UBS conference tomorrow.
Is there that? Oh, yes, there is that. Yes. Big coverage coming through on the China show tomorrow. I will not call in sick. Get my vitamin C and my zinc ready, please, across these markets. Asia Pacific, flat, nothing happening there. U.S. futures coming off highs. The dollar has been swinging, still on the weaker side of things. It's still an earnings story, e-commerce, and all those things in between.
Yeah, okay, despite the fact that Meituan, the stock is basically reversed and we're actually back now and climb back and reverse losses. Not sure why, but certainly because, the outlook doesn't look too good, just given how fierce the competition has been and what Meituan has talked about in the earnings call as well. Let's talk about that with Ellie Jiang. She joins us from Macquarie and really kind of talk about the fact that you're saying nobody wins at this stage. Why not?
Well, the way you look at the online transaction platforms nowadays are that the boundary between e-commerce and instant deliveries are emerging, right? In a way that e-commerce platforms are selling more instant food items, they're selling FMCG supermarket items, and for Meituan, they're selling cell phones on their platforms. So the problem here is everyone's almost like playing offense and defense at the same time. So that's why, when Meituan first look at the JD's entry into food delivery, the first instant reaction would be like, look, I'm already quite big in the space. What else do I have to do, right? But the fact that JD's very aggressive price wars and strategies are taking everyone by surprise. In fact, JD has announced that their daily order volume already surpassed 20 million, right, a few weeks back. And Ele.me from Baba yesterday also announced that the daily order volume surpassed 40 million. That just took everyone by surprise. It seems like people are being much more aggressive in fighting this very high level of convenience, high frequent consumer basket. And I think that is where the problem is, which means in the near term, you see this constant price wars that further compress on everyone's profitability. So even though you see order volume taking a pretty decent kind of rise in the near term, the average order volume decline will continue to compress on the GTV and the revenue. And the fact that more and more platforms have to incrementally invest in the subsidies, especially paying back to the merchants, to the consumers, that also have more headwinds on the profitability overall.
Well, which of the big players have the financial capacity to withstand and absorb the pain for a longer period of time, I guess is the question.
Well, technically, it's still the same old big platforms, right? You've got Baba being the largest player in e-commerce. JD, even though being the number 3 e-commerce player, they still have some sort of earnings buffer, especially benefiting from the trading policy in the past several quarters.
Okay.
So that have given them incremental kind of profit to reinvest. Meituan, obviously being the biggest food delivery giant here, they have already made quite profitable financial performance in the past several years from both in-store as well as food delivery. So that also kind of support the longer-term investment horizon. So what we are calling here is we actually think, given how strong everyone's balance sheet are at this moment, it's going to be prolonged competition across all the platforms.
How long do you think the sort of subsidy-driven competition can last then?
Well, to be fair, I would say the current level of the subsidy ratio is definitely not sustainable, given that we are seeing, 1 or 2 RMB per cup of Luckin coffee flowing around in the market. Yeah. It's not going to last forever. So take advantage as you can, obviously, for now.
Well, consumers win, of course.
Correct.
Yeah.
But for the near term, I would say the second and third quarter will be the peak of competition, especially into the summertime. With a lot of students going on vacations, you will see this big booming demand, especially in the beverage categories. That is where the peak of competition is. So I would anticipate, after the June 18 promotion, more platforms should further kind of focus on the summer campaigns, and that's probably where we see the trough of the earnings.
How are you looking at the share price of Meituan specifically? It can't seem to find a floor recently.
I would say for our house view, we do definitely believe there is definitely lack of earnings visibilities at the current level. Okay. Right? The thesis here is if you look on a longer term horizon, I would say the leadership for the own demand side remains unchanged for Meituan. They obviously have a very strong service mode. They've already been able to establish a very strong mindshare across China. But the problem is in the near term, right? This earnings fluctuations will continue, and like I said, I do think it will carry through until the end of the year.
You mentioned in your report about instant delivery, which is basically non-food instant delivery. Why is that so important, this sort of Insta shopping?
Yeah, that's a great question. In fact, the point we talked about, the boundary between e-commerce and instant delivery, is really to the point that as Meituan are delivering more and more non-food items, it's almost to the point that they are extending the categories into the traditional B2C e-commerce categories. Right?
Blurring the lines, basically.
Correct. Yeah. So eventually, if Meituan is able to sell cell phones and sell, the other electronics on the platforms, then how would you really define e-commerce versus food delivery, right? It gets more and more challenging on that front.
So how would we determine the leaders? Because it's, we have a set of, let's call it the top 3 or 4 companies in one part of the internet. You have another 3 or 4 somewhere else. It seems they're converging and eating into each other's circles, let's put it that way. Right. So if I'm an investor, how do I form a portfolio? Do I just buy all? Do I buy one of, the top of that category? Like, how are you looking at this from sort of analyst perspective?
I think from a broader internet perspective, yes. I would actually recommend the investor to start thinking about different baskets of selections. So on one hand, we've got the pure consumer plays such as JD's and Meituan's, right? Yeah. They tend to still fight in this heated competition with price wars and so on in the near term. Again, like to emphasize, we still do believe Meituan is the leader in the food delivery market, okay. But the competition does blurs the near-term earnings. But if you take a broader view on the entire internet space, I would say AI remains a very big theme, and I actually do define, the AI basket being the likes of Baba or Tencent. They tend to still hold a very strong leadership in both the infrastructure and the application side, and I do believe that brings an incremental revenue streams down the road, and growth is really what we need, right, to support the internet valuation.
Yeah, you mentioned the tech renaissance, right, with AI. That it's going to be more about application now. So you mentioned that the Babas and the like. Is that still the playbook then on how to kind of ride this wave in China?
Correct. It's very interesting dynamics because in China, the giants tend to be a lot more conservative and ROI driven in terms of the AI investments. Obviously, with the U.S. players leading the innovation a wave, the Chinese players tend to follow at the initial stage. But after the rise of DeepSeek, we are seeing a much bigger adoption across consumers and enterprises in terms of integrating AI into their day-to-day operations. And on that front, it's really about the ecosystem who have the stronger connections between the consumers, between the merchants, connecting the dots with each other. And on that front, Baba and Tencent still hold the strongest leadership on that front. Baba has the biggest retail ecosystem, along with some entertainment and kind of media presence. Tencent, no doubt, they are the biggest social giant out there, and they also have a very big Weixin ecosystem that connects not only just social interactions, but a lot of business transactions that's happening already in the Weixin ecosystem.
Fantastic.
Yeah.
Thank you so much.
Thank
Ellie,
you.
That was great.
Me.
Covered everything except Baidu, which is maybe the point. Anyway, Ellie Jiang, there we go, head of Asia Internet and Media Research at Macquarie Capital. I'm just speculating, all right? Okay. So a couple of things, right? Internet has done okay. EVs have done okay. It's also done very well? High dividend plays in China. In fact, when you look at the last 3 months or so, dividend plays have outperformed the benchmark CSI 300 for a third straight month. With that trade still, in fact, winning. Is it a safety play? Is it an income play? Is it an indication of risk appetite? Is it a hedge on the other side? Abhishek Vishnoi, our Asia Equities reporter, senior Asia Equities reporter, joins us now to talk us through this. Yeah, it's been it's come back in some way, this play from recent years, Abhishek.
That's right. And, like you were saying, David, it points to a barbell approach towards China. I mean, while China is coming out as an innovation hub, in portfolios, right, on tech and pharma and other sectors, EVs, like you were mentioning, there's also some element which is seeking some safety, return on capital, and that's why dividend is very important. And like you were saying, dividend names are outperforming CSI for a third straight month. So this essentially shows the transformation that China is going through as an economy, as a market, and also China's dual role right now. From being an innovation hub on the one hand to being a dividend play on the other. So this is sort of that barbell balanced approach that investors are taking right now in China. And if you look, I mean, it also goes into a lot of sectors which are domestically oriented, like banks for that matter have been paying decent dividends. There are private companies as well which have started announcing dividends or even buybacks in different forms. And this is one theme which is here to stay. Till the time China firmly establishes itself as a tech bet in global portfolios or a possible cheaper replacement to Mac 7.
Abhishek, I'm taking a look at some of the movers on the Hang Seng right now, and the leaders across the board right now are all things pharma. Can you tell us what's going on there?
Absolutely. I mean, it's not a one-day trend. I mean, the rally has started several weeks ago. And I remember there was this huge out-licensing deal between Pfizer and 3S Bio, where a cancer drug was taken by Pfizer for about $1.2 billion. That sort of began the re-rating of the sector. Then we saw some sort of spin-offs happening, not in China, but in Korean biologics name, which actually accelerated the momentum. We are also seeing, decent, momentum around HK listing, HK Premium with Hengrui, the bellwether for the sector, doing great. For today, these gains, this momentum, this trend has been accelerated because there is a huge cancer-related conference happening in the US where, sell side is expecting, a lot of positive readouts and trial data on different kind of drugs which are going to be positive for new indications, maybe even opening newer markets for Chinese companies. And that's why there is a lot of excitement in the pharma space today. So this is a momentum. This momentum has been building out for several reasons, which were event specific, which made pharma as an event specific play. But like I was mentioning earlier, innovation hub. That's where China is going with the sectors in tech and pharma, and that's where this rally is also pointing towards. My colleague Sangmi is working on a story right now. I think we'll be able to join the dots and provide more information on the terminal in some time.
Yeah, as you say, right? Innovation is not just about EVs and manufacturing. We're chips and stuff. This is really more about the healthcare space as well. Abhishek, thank you. Abhishek Vishnoi, there, Asia Equities senior reporter, joining us out of Singapore. We got plenty more ahead. This is Bloomberg.
Chinese Premier Li Qiang is calling for stronger ties with Southeast Asia as he pitches China as a reliable partner amid these trade tensions and uncertainty, particularly with the United States. Li has been mounting this charm offensive in meetings on the sidelines of the ASEAN summit taking place in KL. Avril Hong is there for us. Well, she's with us on the ground right now. Avril, what's going on? What's the latest?
Yeah, David, Li Qiang, as you say, pitching China as a more reliable partner, not just for ASEAN, but the GCC countries as well. In terms of the latest, we've already been hearing how the Chinese premier, cited by state media Xinhua, saying that they're really looking forward to collaboration, cooperation with the GCC and ASEAN countries, that they are willing to make these positive contributions to uphold the interests of the global south. So this is really a sign of the times. But I'd just like to highlight as well in a showcase of China's commitment, because up until last evening we actually weren't quite sure who was going to be part of the Chinese delegation, and our reporter Josh Xiao spotted the Chinese Commerce Minister Wang Wentao along with the PBOC Governor Pang Gongsheng. So China's really bringing out the big guns as part of this delegation. It's a strong lineup showcasing their commitment to this part of the world. Now, that being said, ASEAN and GCC as a bilateral, they only met for the first time at a summit last year, and now they're bringing China into the mix. Does this sort of represent a departure from the bilateral format of such summits for ASEAN? Does this potentially complicate things when it comes to agenda setting and what is achievable in terms of outcome?
And you've been talking to more of the hosts there. You just spoke with the Malaysian trade minister. Tell us about that.
Yeah, Yvonne, I spoke to the Malaysian Trade Minister, Zafrul Aziz. I mean, we've heard how the Chinese and the Malaysian sides, they've been suggesting areas of competition and collaboration, I should say. And this includes for areas such as AI. But I think the focus is really still going to be about the tariff negotiations with the U.S. Malaysia faces potentially 24% rate of tariffs, but the Malaysian trade minister in my conversation said that any reduction in tariffs would be a positive outcome, and that the U.S. suggestion at this point has been that the base rate is still going to be 10%. Potentially, not just for ASEAN, right, among these other countries that are negotiating with the U.S. as well. Then the question becomes, to what extent does this hurt potentially some of these ASEAN countries in terms of, the competitiveness for exports if their rates of tariffs with the U.S. is going to be higher than that of China's? Remember as well that China has made it really clear to partner nations, do not cut deals that come at the expense of Beijing. So certainly trade figuring into conversations here at the ASEAN Summit.
Great stuff, Avril. Thank you, Avril Hong. They're joining us there at Kuala Lumpur. And you're looking at live pictures, of course, of that ASEAN-GCC summit opening in KL this morning. We got plenty more ahead. This is Bloomberg. Japanese marine transport firm Mitsui O.S.K. Line says it is becoming, quote, relatively optimistic about the global trade situation. President and CEO Takeshi Hashimoto told us his firm is observing a strong bounce back in Chinese cargo movement as Washington and Beijing seek to de-escalate.
Almost every day, every week, the situation is changing. So as of today, I'm becoming relatively optimistic because that the most important issue was, of course, the tariff and the trade policies between the big countries like U.S., China, or U.S., EU, and it seems to me that still that lots of the bumpy situation is continuing, but at the end of the day, that the gradually that the situation will be stabilized. So compared to our estimation in early April, that today's sentiment is better. So that I'm relatively optimistic about the future the development of the global trade situation.
What about the situation when it comes to carrier orders from China?
China, the situation is very, very drastic. In April, we observed the dramatic decrease of the trade volume between China and the U.S. and quite big negative impact for our industry too. However, after the agreement between China and the U.S. in early May, now we are observing the quite strong bounce back of the cargo movement. Therefore, of course, this is the relatively temporary agreement, and we should see that what will be will happen in coming 90 days. However, so far, we are enjoying the very strong market situation in May. So I really hope that at the end of the day that this trade conflict can be settled down in a reasonably good way.
We have seen this trade conflict before, though, during the first Trump administration. Have you taken any lessons from that period that you can apply now?
Yeah, the first Trump administration, the situation was a bit similar at the very early stage of the Trump government. That there are lots of the confused situation, but gradually that we could manage to adjust ourselves to the new market circumstances, and tariff war itself also slowed down during the first administration of Mr. Trump. So I really hope that at the end of the day that everybody recognize that the necessity and importance to sustain the global economy and global trade, because it's a kind of the backbone of the people's life, and also the production of the industries or the supply chain. Therefore, still bit early to decide. However, as of today, I'm relatively optimistic, and focusing that what's going on between the trade talk between Europe and the U.S. for coming few weeks time.
There we go. That was Mitsui O.S.K. CEO Takeshi Hashimoto speaking with our colleagues, of course, earlier on the Asia trade. Right, very quickly before we go, just a brief look at pharma stocks. We talked about this earlier on, and we now understand in some context on why we're seeing some hefty gains there. So there is a conference taking place, the American Society of Clinical Oncology, and this note out of CITIC Securities underscores the gains today. Many of the drug companies have presented excellent clinical data at the conference taking place, and I guess that's why we're seeing perhaps some big moves in those stocks alongside some encouraging clinical data. This is according to Jefferies on some specific fronts here and drugs. Okay, treasuries very quickly. Cash treasuries are up and running for the first time in several days, and we're looking at a third day of declines across the treasury space, led by the long end. And this is what we're seeing in Japan as well. So we're down about 3.5 there. And HIBOR, of course, before we go, is one that we've talked about at length about, but not a lot.
We check every day now.
Yeah.
And yeah, we're still seeing it low. And as Dave mentioned, right, the whole month of May, we've basically only seen 2 days where HIBOR actually has been up as well. That's it for us here on the China Show. Insight with Helinda Ahmed is next. Stay with us.